The relationship between interest rates and NASDAQ movements. Interest rates, controlled by central banks like the U.S. Federal Reserve, significantly impact financial markets, including the NASDAQ Composite Index. The NASDAQ, heavily composed of technology and growth stocks, is particularly sensitive to interest rate changes. Understanding this relationship helps traders and investors make informed decisions. How higher interest rates affect NASDAQ. When the Federal Reserve raises interest rates, borrowing becomes more expensive for businesses and consumers. This leads to several effects. Higher borrowing costs. Many tech companies rely on borrowing to fund research, development, and expansion. Higher interest rates increase the cost of capital, reducing growth opportunities. Lower stock valuations. Growth stocks, which dominate the NASDAQ, are valued based on future earnings. Since interest rates affect discount rates, higher rates reduce the present value of these future earnings, leading to lower stock prices. Reduced consumer spending. Higher rates lead to increased costs for loans and credit, reducing consumer demand for tech products and services, which impacts company revenues. Example: in 2022, the NASDAQ dropped over 30% as the Federal Reserve aggressively raised interest rates to combat inflation. How lower interest rates affect NASDAQ. When the Federal Reserve cuts interest rates, the effects on the NASDAQ are generally positive. Cheaper borrowing. Companies can access funds at lower costs, allowing for more investment in innovation and expansion. Higher stock valuations. Lower rates increase the present value of future earnings, making growth stocks more attractive to investors. Increased risk appetite. Low bond yields push investors toward equities, boosting NASDAQ stocks. Stronger consumer spending. Lower borrowing costs encourage consumer spending, benefiting companies that rely on high demand for technology products and services. Example: in 2020, the Fed cut interest rates to near zero, fueling a massive NASDAQ rally, with tech giants like Apple, Amazon, and Tesla reaching record highs. The NASDAQ and interest rates have an inverse relationship. When rates rise, the NASDAQ typically falls, and when rates drop, the NASDAQ tends to rally.